Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, 30th of August. We have a busy week ahead of us, which starts with Japanese unemployment figures on Monday. On Tuesday, we should be on the lookout for Chinese manufacturing PMI data, also Eurozone preliminary consumer price index, and Canada GDP quarter two figures, and US consumer confidence data. Going forward, Australian GDP is due for quarter two. That will be followed by Chinese, UK, Canada, and US manufacturing PMI data for August. Also, Eurozone unemployment rate for July, and US ADP employment change and US crude oil inventories will be closely watched on Wednesday. On Thursday, Australian trade balance for July will be followed by US jobless claims figures. The week will finish on Friday with Eurozone retail sales and probably the most anticipated data release for this coming week, which is US non-farm payroll numbers, which are scheduled to come in at 763,000 from previously published 943K. Also, US unemployment rate is due, and it's forecasted to drop from 5.4% to 5.2%. We should also pay attention to US average hourly earnings. Now, let's take a look at a few markets. Now let's start with the Bitcoin. Bitcoin is consolidating sideways in what appears to be the overall uptrending market, which is creating the sequence of higher lows, and the current intraday 4-hourly price action is supported by multiple rising moving averages and also rising trend line. Key trading level going forward is at 47,570. As long as that level holds, bulls are in complete control, potentially indicating that a breakout above this level and a continuation to the upside could target additional resistances towards 51,180, followed by 53,100, 55,000, possibly even towards 58,600 over a longer period of time. Alternatively, if we see a corrective pullback and a loss of this rising support trend line, in particular a close below 45,660 and an end of day close and the retest of that level from underneath as a newly found resistance, that could trigger a deeper corrective pullback targeting additional downside support towards 42,000. German 30 or the DAX index is consolidating sideways here in overall uptrending markets. The key trading level going forward is at 15,800. Pullback to that level and a rally from there, or a breakout and an end of day close below this, above this falling resistance trend line at 15,900 could open the way for the extension to the upside, targeting new all-time high, targeting 16,000 initially towards the cluster of these highs. Breakouts above that level, 16,100, 16,200. Your guess is as good as mine. Alternatively, if we see a corrective pullback and a dip lower and a loss of 15,700, which is this current swing low from 26th of August, could open the way for a deeper corrective pullback targeting additional supports towards the clusters of these lows at 15,650, 15,600, possibly even 15,455. Nasdaq, we had a sideways consolidation with a bullish breakout, and another sideways consolidation here. Yet again, this is the 4-hourly intraday chart. This was ahead of Jackson Hole, Fed's Jerome Powell speech, which market liked, and we saw a bullish breakout higher. Key trading level going forward is at 15,300. As long as that level holds, so this is a breakout, we could see a possible retest and a push higher, or a breakout and a drive higher from the current highs above 15,500. That could indicate the continuation of this bullish sentiment targeting new all-time high, and your guess is as good as mine. 15,600, 15,700, and so on. Alternatively, if you see a corrective pullback and a loss of 15,300, that could open the way for a deeper corrective pullback and retest of this previous resistances at 15,260, i.e. the swing low from 26th of August, possibly even 15,160 as a newly found support to the downside. This is euro dollar. Euro dollar had a bullish breakout higher. Yet again, the same excuse after Jay Powell's speech. We had a US dollar currency weakness against most of the other currencies. Euro dollar broke out higher. We have the sequence of high, lower high, and then this is potentially making an attempt to break above this high. So key trading level going forward on the upside is at 1.18. Nice and round number, really easy to remember. Support to the downside is at the previous consolidation here at 1.1770. So basically a pullback to previous resistance, 1.1770, and a rally or a continuation to the upside, break an end of day close above 1.18 could open the way for the extension to the upside, targeting additional resistances at 1.1850, 1.19 levels. Alternatively, if you see a corrective pullback and a loss of 1.1770, retest of that level from underneath as a newly found resistance, that could open the way for a deeper corrective pullback, targeting additional supports at 1.1750, 1.1720, possibly even 1.17 to the downside. Sterling dollar also had a bullish reaction on Friday, but overall trend is still intact. We have the sequence of lower highs and the current price is reaching a really important resistance at 1.38 level. Breakout above 138, an end of day close above that level, and a retest from above could open the way for the extension to the upside, targeting additional resistances at 1.3880, 1.39, possibly even 1.3980 on the upside. Alternatively, if you see a rejection at this area and a gradual move lower, pay attention to a major support to the downside at the cluster of these lows at 1.37. Dip below 1.37 and end of day close below that level could open the way for a deeper corrective pullback, targeting additional support at 1.3650, 1.36 to the downside. Dollar Japanese yen had a corrective pullback towards 109.80. We have the sequence of high, lower high. We have a sequence of consolidation, sideways consolidation here, pointing to a fairly decent resistance at 110.30 area. A rally from the current levels, 109.70 to the downside, which is a major support, rising support trend line, and also the previous lows. Rally from here and a breakout above 110.30 could open the way for the extension to the upside, targeting 110.80, 111, 111.60, possibly even higher. Alternatively, if this US dollar weakness continues and we see a drive lower and end of day close below 109.70, a retest of that level from underneath as a newly found resistance, that could trigger a deeper corrective pullback, targeting additional support towards 109.20, possibly even 109. Let's talk about gold now. Gold had a bullish reaction to Jay Powell's speech, i.e. US dollar weakness, gold higher. Gold is uptrending from the intraday point of view, supported by rising trend line, and the current price is trading above psychologically important 1810, which is a cluster of these previous highs. That's the key trading level at the moment. So pullback to 1807, 1806, and a rally above that level, or the gradual move higher from the current levels and a drive higher could open the way for the extension to the upside, targeting additional resistance at 1827, 1831. Breakout above 1831 and end of day close above here could open the way for the extension towards 1850. Alternatively, if we see a corrective pullback and a dip lower and an end of day close below 1806, retest of that level from underneath as a newly found resistance, that could trigger a deeper corrective pullback targeting this rising support trend line and also the cluster of these previous highs at 1790, possibly even 1780 to the downside. Lastly, let's talk about crude oil. Crude oil had a bullish run. We had almost a 10% rally over the past trading week. Really impressive move higher. Key trading level going forward for WTI, US traded oil, is at 67. Pullback to 67 and a rally or a gradual move higher and continuation to the upside could target additional resistance at 70. Yet again, nice and round number, but also falling resistance trend line as well, and the cluster of these previous highs. Only the end of day close above 70 and a retest of that level from above as a newly found support could trigger the extension to the upside, targeting new resistances towards 72.20, possibly 74 and even higher. Alternatively, if we see a rally and a rejection at 70 or a gradual move lower from the current levels and a loss of 67.30 area, which is the cluster of these previous lows here and also 20 period moving average, that could trigger a deeper corrective pullback targeting additional supports towards 67, 66, 20 to the downside. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.
Let's start your investment journey.